Welcome to my channel, good people. In this episode, I will explore the traditional banking system modes of operation and highlight how and why they will not be able to function effectively in our global economy in the nearest future. And I will examine how crypto assets has introduced innovative and creative technology in the design and delivery of financial services. Stay tuned for details. Meanwhile, this is for financial education purposes, so thank you. Grab a cuppa, of course I mean a cup of tea, and then subscribe. Okay, now let me start by telling you what happens to your money in the traditional savings account. You see, if and when you put your money in the bank, your money is losing its value. Why? Because of inflation. And the rate of inflation is the change in price for goods and services over time. What does it mean? Okay. It means the item you could purchase with say £20 today will cost you say £23 in another 2 years, or even more in 5 years. Yes. Your money is safe in the bank, but it will continue to depreciate over the years, even with the interest the bank pay on it. Consequently, you will not be able to keep up with inflation. How? Okay, now let me explain. Let's say the inflation in the UK is at 2.1%, which is according to the Office of National Statistics, and the bank national average interest rate for saving account is 0.06% according to bank rate recent survey. So what does it mean? Well, it means your money, if your money yields 0.06% and inflation is at 2.1%, you are losing say 1.94% or 2.04% on the value of your money every year. And do you want to know why inflation is inevitable? Well, it's because of printing of excess money. Consequently, it results in the decline of purchasing power of a given currency over a time. So what am I trying to say? Good question. You see, the problem, the main catalyst of inflation is the printing of excess money. And this is where the digital currency using crypto technology steps in. And a good example is Bitcoin. Oh, okay, stay with me. Let me explain. You see, Bitcoin is a new digital financial system built on the internet, and it is decentralized. And because of this attribute, Bitcoin cannot be mint or print like the fiat money. And to inform you, Bitcoin is secured in the blockchain technology, which is not duplicated like fiat money. Hence, it is deflationary and contrary to inflation. Okay, now moving on. You see, every time you use your debit card or credit card to make purchases, banks make money from you. You see, banks make money through the processing fees. Okay, here's the key. You see, the bank charge the shop owner a processing fee, boom, inevitably includes the bill in its sales price. Okay, let me break it down. Let's say you purchase item from Marks and Spencer worth £400, and you pay with your credit card. And let's say the merchant is charged 3%, which is Marks and Spencer now, on every payment. It means the bank gets £12 on this single transaction because they provided the paying machine. Okay, now you see, the merchant will also charge you to cover the money charged by the bank. Meanwhile, we now have several online decentralized financial platforms using blockchain technology that is willing to borrow you money, fiat money, even with bad credit history. What they require of you is your digital currency like Bitcoin, Ethereum, Litecoin, Stellar Lumen, etc. as collateral. Example is Nexo, Celsius, BlockFi, this guy here, and Binance, etc. Some of them now offer a Bitcoin credit card with a lot of incentive attached to it, and you may even get paid if and when you use the Bitcoin credit card. You see, the banks makes money off you if and when you sign for that credit card. Okay, now here's the key. You see, the interest on your credit card could be raised by bank anytime as they deem fit without consulting you, say from 16% to even 80%. Question is, how are they able to get away with this? Okay, they usually send you, say, 15 to 30 days notification shortly afterward you sign the papers. And this is true, you agree with me, this 99% of most of us don't read this long complicated letter. And talking about interest on the loan in the bank, you see the average annual percentage rate on a personal loan among the bank in the UK range from, say, 10% to 20%. Actual rate will vary based on how creditworthy you are. Okay, now this is where the online decentralized platform step in. As I mentioned earlier, the likes of BlockFi, Nexus, Celsius, Binance, okay, we help you out, and you'll be surprised to hear that all of them offers you a good rate. With BlockFi, you can borrow money at a rate of 4.5%, even with a bad credit history. And as a bank customer, you will pay a foreign transaction each time you cross the border, if and when you travel from point A to B, say from UK to another foreign country, and you use your debit card or credit card, you will be charged by the bank even higher. Here's what you should know. You see, cryptocurrency are borderless, and all transactions are not subject to any second or third party. No bank or central authority will charge you excess money. You see, besides Celo and Stellar, Lumen network help you to transfer currencies abroad at a lower fee without the bottleneck of the SWIFT system introduced by banks that charge a higher fee. For more on Celo and Stellar Lumen, check the video at the end of this clip. We want to inform you, you are being watched by your banks. That is true. So see, they monitor your financial activities, they keep details of who sent what, the amount, and for what purposes. And then they usually send it to the authority. And these data are often used by advertisers to push products and services to you. And to inform you, all digital currencies, those one embedded in blockchain technology, are very secure. Let me break it down. So blockchain is a digital ledger that is immutable and it is very secure. You may not be able to figure out who owns what or who sent certain amount. It gathers, verify, and record data approximately every 10 minutes and cannot be duplicated by fiat money. And you should know that banks lend your money to other businesses and mortgages at higher interest rate through a policy called fractional reserve banking, while they pay you pittance. In effect, technically, banks don't keep your money in their safe closet. Your money and my money is busy working somewhere to generate interest for the bank. That said, I am convinced by now you are getting a full picture. Crypto asset. Why crypto asset using blockchain technology is the future and not the traditional bank. You see, you will agree with me that crypto asset has introduced a paradigm shift in the use of technology, and as such, the concept could be regarded as a creative disruptive of financial services, which would have an unprecedented positive effect on the global economy. So what's your opinion on the subject matter? Please, I'd like to hear. Okay, our target is 500 subscribers, and for those who already subscribed, thank you. The goal is to generate wealth, build companies, and then create jobs. Bye now. Thank you.